Statement of cash flows. Yes, this is our topic, and the module is about the working notes. And in this module, we will discuss the very important working note for this statement of cash flows, and that is cash generated from operations. As I discussed, that this cash generated from operations is something that we work out from the sales figure, cost of goods sold figure, and the operating expenses which are appearing in the income statement. Altogether, it is known as operations area. Okay. One thing more, that this cash generated from operations is calculated in two ways. One is known as direct method, and the second one is known as indirect method. So your attentions would be required to learn these two methods, direct and indirect, for calculating cash generated from operations. Very well. So this is the format of statement of cash flows. We have already discussed this thing, and we are discussing this working one now for calculating this figure, cash generated from operations. Okay. So you see that I am saying that this figure is something very important. The working of this figure from examination point of view as well carries more marks. Okay. Well, so please be attentive and see that in this working one, under the direct method, we are calculating cash generated from operation. It covers cash collected from customers, cash paid to suppliers, cash paid to and on behalf of employees, and cash paid for other operating expenses. So altogether we get this cash generated from operation thing. Well, the thing is that this cash generated from operation is further requiring some working 1A, working 1B, and working 1C. But before discussing this, just keep in your mind that cash collected from customer will be calculated from the sales figure, because these are the sales which are coming from the customers. And this cash paid to suppliers will be mainly calculated from purchases figure, because suppliers are generated because of the purchases. Okay. In a way, suppliers are the people from whom we do purchases. Okay. So cash paid to and on behalf of employees, this figure will be calculated with the help of salaries. In fact, it covers salaries and wages. Who are the employees? How much we have paid to them, we will work it out. And then cash paid for other operating expenses, we will see that all other operating expenses other than the salaries and wages will be placed over here as to their payment of cash. All right. Well, so working one is about this thing, cash collected from customer. Straight away, we will prepare a T account. Remember, it is not a debtors account, but it is like a debtors account. Okay. Why it is not a debtors account? Because in this, we are showing total sales in the debit side. Whereas in the debtors account, we show only the credit sales. Remember, it is not a debtors account, but it is prepared just in a way as we prepare debtors account. So opening balance of debtors is placed over here, and total amount of sales is placed in the debit side. Okay. Because ultimately we need to know how much cash we have received from cash customers as well as credit customers. That's why we have to put cash and credit all sales over here. So bad debts, discount allowed, and if there is sales return, and all other items whatsoever appear in the credit side of debtors account will appear over here. But remember, once again I'm saying total amount of sales will be placed over here, and if we have sales return, total amount of sales return will be appearing in the credit side, and closing balance of debtors will be placed here, so that the balancing figure that we will get will be the cash collected from customers. So it will be placed here. Remember, we are doing working for direct method in order to calculate cash generated from operations. Next working is about cash paid to suppliers. remember that will be a payment in this working for calculating cash generated from operations. And this is exactly the same thing. I will repeat that it is not a creditor's account, but it appears or it is prepared in a way as if we are preparing creditor's account. Why? Because now we have to place total purchases over here. These total purchases will include cash purchases as well as credit purchases. Okay. And discount received and other items of creditors which are appearing in normally the creditor's debit side are placed over here, means purchases returned, etc. And the balancing figure what we will get is cash paid to supplier. But in this account or in a working that we are having over here, 1B, for calculating cash paid to suppliers, we need further working, okay, in order to calculate purchases. And that further working is that total purchases would be calculated by adding closing inventory in the cost of goods sold and subtracting opening inventory from this cost of goods sold. We will get total purchases. If you just remember that while calculating cost of goods sold, what we did, we added opening stock in purchases and subtracted closing stock from purchases to get this cost of goods sold. Now it is reverse working. Okay, we are working back from cost of goods sold to total amount of purchases. So it's not that difficult. Just learn this formula. Cost of goods sold plus closing stock minus opening stock. We get total amount of purchases, which is in fact cash plus credit purchases. Okay, this is placed over here then. And rest of the things we have discussed to calculate the balancing figure of cash paid to suppliers. All right. And then comes cash generated from operations, in which, if you do remember, let's see over here. Yes, working 1C, which is cash paid for other operating expenses. Okay. It is something very simple that whatsoever we have paid for salaries and wages will come over here. But this working is something sensitive. So let's see, and please be attentive for this, that we will pick up all operating expenses, which is administrative, selling and marketing expenses. We will less salaries and wages. Why? Because the cash payment of this salaries and wages has already been taken here. Okay. So this is what we have already worked out. So we will subtract from all operating expenses, we will subtract salaries and wages. Then we will subtract depreciation, amortization, loss on disposal of asset, bad debts and discount allowed. Why? Because for all these expenses we do not pay cash. And what we are doing, in fact, we are working out cash generated from operation. That how much was the amount of cash that was generated. So we will be working out directly the cash flow items. So the items of expenses which are non-cash, for depreciation we don't pay cash, for amortization we don't pay cash, for loss on disposal we don't pay cash, for bad debts we don't pay cash, for discount allowed we don't pay cash. So all these items are clubbed together and subtracted from this all operating expenses. We get cash paid for operating expenses, or cash based operating expenses, you can say. Okay, these are cash based operating expenses. Add opening due less closing due, minus opening advance and plus closing advance. If you do remember, this is the reverse order of what we have learned in accruals. Okay, so we are in fact working out cash paid for operating expenses figure. So in this cash based operating expenses, cash based, okay, cash based operating expenses. Okay, the expenses for which we have paid cash, these were the non-cash based operating expenses. Okay, well, so this is a category in which we do not pay cash, or we never pay cash, and rest of the balance are the cash based operating expenses. And we will do reverse working for this due and advance. to work out, here we go, cash paid for operating expenses. All right, that's great. So this is how we work out cash generated from operation under the direct method. Now we will discuss the indirect method. Under this indirect method, we start from profit after tax figure. Okay, we take this from profit or loss account, we add income tax in order to calculate profit before tax, or even we can start from this as well if it is given. So now we have to shunt out the non-cash items from it. So what we do, in a way, as I have already told you, that we are calculating cash generation from operations, and operations cover sales, cost of goods sold, and operating expenses. Financial charges are also not the expenses which come under operations. Okay, so in a way we will add this in this figure, and then we will subtract other income. Why? Because we are talking about operation, and operation is the portion, again I'm repeating, sales, cost of goods sold, and operating expenses. So now we will get this figure of profit from operations. So if you can get this figure directly from your profit or loss, then you don't need to do this working. Okay, then straight away pick up this profit from operation figure and start working back non-cash items from it, because we have to shunt out, we have to separate non-cash things from this profit from operation figure. So how to do? Remember, in our income statement there are few non-cash items which are belonging to the non-current assets, and there are few non-cash items which are belonging to the current assets and current liabilities, which are working capital items. Okay, so take care of this thing. First of all, what we will do, add back depreciation, impairment, and loss on disposal. Okay, and once we are done with this, okay, this figure we have to add in profit from operations. And then once we are done with this, what we do, we have to adjust plus or minus. Practically we will solve a question on it. So the stock, debtor, prepaid operating expenses, creditors, and accrued operating expenses. I'm saying operating expenses. Okay, so their working is done in this part. Okay, so that after its adjustment we will get exactly the same cash generated from operation that we in fact work out under the direct method. So either we use indirect method or we use the direct method, our cash generated from operations would remain the same. Okay, once again I'm saying that we work out cash generated from operation with the help of sales, cost of goods sold, and operating expenses. All right, so the important tips to remember in this module are that direct method focuses on the receipts and payments directly. Okay, cash collected from customer, cash paid to supplier, okay, cash paid to and on behalf of employees, and cash paid for other operating expenses. Whereas in the indirect method, we focus on shunting out the non-cash items from the profit from operation figure, so that we separate non-cash items from the profit figure, and what left is in fact the cash flow relating to the operations. And one thing again, I repeat, that operations is the area that covers sales, cost of goods sold, and operating expenses. Okay, rest of the income statement items will be discussed in the upcoming module. Thank you.